Well, what a cracker of a gift the Indian startup ecosystem has received ahead of Diwali. On the 7th of November, Mamaearth became the first direct-to-consumer startup to list on the Indian stock exchanges and the first unicorn to go public after a gap of 18 months. Strong gains for venture capital investors, hope for some of the IPO-ready startups, and Mamaearth's listing has brought cheer to a somewhat knackered Indian startup ecosystem. With just $6 billion raised so far this year, funding has dropped to levels last seen in 2016-2017. This as per data from Venture Intelligence. Venture capital investors are sitting on a $20 billion pile of dry powder, which they are unwilling to commit just yet, and for good reason. It's been a tough year, one that's seen fraudulent or selective financial reporting. It continues to be a hard road to black for even the most valued startups. We'll have to wait for another 4 years to see half of India's 100-odd unicorns turn profitable as per Red Seer. And more than 17,000 employees were laid off in a bid to cut losses. Having said that, there's been some clear winners too. Online retail or e-commerce being one. 2023 marks the 10th year of e-commerce festive season sales. Just between Rakhi and Diwali, GMVs are projected to hit a record 90,000 crores, of which half came in the first week of the season. Artificial intelligence. That has also emerged as a big theme this year. 10% of the total funding so far committed to startups dabbling with AI. Fintech continues to see good traction, and enterprise remains a solid opportunity. So what does 2024 have in store for startups, and what will it take for investors to loosen the purse strings? Hello and welcome to this special edition of Young Turks, India's longest running show on startups and entrepreneurship. I'm Shereen Bhan, and before I bring in my guest for the day, here's wishing all our viewers and the Young Turks community a very happy and prosperous Diwali ahead. Joining us now, Kanwal Singh, Managing Partner and Co-founder of Fireside Ventures, Madhu Shalini of Managing Partner at Rocketship VC, and Karan, Mohla, General Partner at B Capital. Madhu, Kanwal and Karan, many thanks for joining us. Here's wishing each one of you and your teams a very happy Diwali. Kanwal, I'm going to start by, with you, because yours has been the big story with the Mamaearth IPO. I remember you telling us that the investment into Mamaearth, that decision happened over a phone call, and you started with a 30 lakh rupee infusion?
That is true, Shereen. Thanks for having me, and happy Diwali to everyone. I mean, it's been, like I was saying, a very surreal journey with not just Mamaearth, but just the experience of the whole new age brand space that we chose to participate in the last 7-8 years. And yes, I met Varun on the phone, really liked what he was telling me. This was even before the business had started. And then I met Varun and Ghazal in Delhi, and just, fell in love with them and fell in love with the idea. And really, that's how the journey started with them.
Well, and the journey has come to a very significant milestone with the listing. But, you were talking about this D2C bet, and you were one of the early investors that decided to foray into this space with the kind of money that you've pumped in, Kanwal. And I want to understand from you, what have you seen that's changed? What have you seen that gives you the confidence that this rally, this confidence that we are seeing has more legs to it? And what do you believe will drive growth from here on?
So actually, a lot of fundamental factors, Shereen. We believe that this is just the start of the journey. And honestly, there is so much potential to build on top of this, because India is a very unique market, huge consumption opportunity, but not enough brands. And one of the big challenges that I saw maybe about 7 years ago was that there is not enough infrastructurally the ability to build brands selling mom and pop stores and doing really mass market kind of brand building. So in that context, we realized that digital infrastructure was actually disrupting the business of brands. And that was the intuition of getting in at that point of time. I think that was a point of time decision which really worked for us. Then COVID came, it accelerated the adoption of digital brands. And now the whole omni-channel, ONDC, quick commerce. So there are so many levers of growth. But fundamentally, the consumers are becoming smarter. They're looking for more choices. They want more interesting brands to consume. And just the infrastructure is playing into that positive demand. And that really excites us about the future.
Well, speaking of the future, and let me get Madhu into the conversation. If consumption is the bet that Kanwal is making, Madhu, as far as Rocketship is concerned, you are betting really on what's happening in the tech space, whether it's climate tech or space tech. And that's the kind of future opportunities that you're willing to invest in. What's looking good to you? What is the basis of the thesis that you're making? And what next now in that journey?
Absolutely. It's wonderful to be here. Shereen, happy Diwali. We are a data-driven fund, and I can't say that enough because we are looking at what's going on in data, through our algorithmic lens. What we have seen to sort of, dovetail to what Kanwal was saying is the D2C brands are doing really well in our data, but also things like space tech. So India is just such a hugely diverse startup ecosystem right now, which we're really excited about. And that's come with a foundational change in great startup founders, a great ecosystem that's now seeing IPO pipelines, and really excited to be seeing this IPO coming out of a very difficult last 2 years. But what we are now seeing is that there are entrepreneurs in the space realm. We are obviously investors in Agnikul, which is India's first private rocket ship. We are also seeing, sort of climate out of India. And so the B2C to B2B to deep tech, it's a comprehensive, playing field right now in India, which is really exciting to a lot of international investors like us that has big bets in India. And we are going to continue to have big bets in India.
Madhu, I'm aware of how the algorithm tells you where to put your money and which bets to make. So at this point in time, outside of space and climate tech, which are the two spaces that Rocketship is actively looking at, and the D2C space that we just spoke of, where else are you witnessing a spike coming in on the algorithm that you could potentially look at writing out checks for?
Absolutely. I think fintech and e-commerce, seems to be the two big places that we are seeing a lot of activity in. And there is a lot of requirement in India for for disruptions, in terms of just the way that financial services are offered, both in B2B realm and the B2C realm. We continue to see activity there, and e-commerce is just hopping with a lot of different verticals, and D2C being one subsector of it, which we are now seeing. To Kanwal's point, there's just a lot of, there's a lot of population. Consumption is ripe in India with very few brands. India requires more brands, and there is just a lot of room and breadth for it, and depth for it as well. And so we are seeing it in different realms, in different spaces, and so D2C is something that we are seeing. Yeah.
Well, clearly D2C has got everybody's attention at this point in time. And, I was having a conversation with the CEO of HUL, and he believes that this is going to be India's consumption decade. And I think that's the bet that each one of you is making as well. But Karan, let me come to you before we talk about specific bets. 2023, a year that you would like to forget. What's the outlook for 2024?
No, firstly, thanks for having me, Shereen. Look, I think it's been a very interesting year. It's been a year of very clear, distinct halves or 4 quarters, depending on how we want to look at it. I think the first half was with a lot of hangover from 2022 and a lot of the normalization that was required. I think a lot of that has already happened. What we've seen is a lot of green shoots over the last 3 to 4 months. I think Mamaearth's a phenomenal milestone as a part of that. Many more up ahead in terms of the pipeline, and quite excited about what lies ahead in 2024. There's a lot of things which will affect it at a macro level, which are not necessarily in any one person's control. But I think on the whole, excited about what lies ahead. Yeah. The consumption story will remain strong for the next 10, 20 years, without a doubt. I think there's 2 very distinct kinds of opportunities. One is the market within India, which is going to be larger, deeper for years, decades to come. And then there are the opportunities that start outside of India, right, which are built from India. And those are opportunities which were equal, whether it's cross-border SaaS from India to the US as a global fund. I think we're extremely bullish on that, have been from day one. Climate is another area, as Madhu mentioned, we're very excited about, have been investing in for the last few years. And then areas like, digital healthcare, where you have healthcare SaaS coming out of India, as well as, digital healthcare being built for India. So I think the pot of opportunities is growing exponentially. The number of entrepreneurs that we're seeing, company formation that had stagnated a little bit towards the end of last year is back up. And again, as I mentioned, the green shoots really is something which is a positive sign taking out of this year. And that's kind of what, hopefully Diwali can, be the catalyst for in many ways going forward.
Yes, I would imagine that the ecosystem is hoping that Diwali will truly turn sentiment around. But Karan, before I talk about the domestic opportunity as well as the aspiration of building out global brands, let's continue to build on the normalization theme that you spoke of, and that a lot of the pain perhaps is behind us or past at this point in time. You're dealing with a couple of big, troubled companies, so to speak, whether it is Byju's at this point in time, which is perhaps the biggest one, and all eyes on how that finds itself out of trouble, or Farmizi, where we've seen a significant cut in valuations. And there are many others, and similar stories playing out across the system. Do you think the pain is behind us, and how many of these companies do you truly believe will be able to steer themselves out of the current turbulence?
Oh, look, that's a great question. I think part of that is the learning that's happened over the past 12 to probably 18 months at this point. There's a lot of correction and normalization that was needed, both in terms of governance, in terms of how businesses were being built, in terms of how investors and founders thought about building those companies going forward. So I think to a large extent that's come to where things are at the right place. There's probably a little bit more that needs to happen, going forward. But I think that's a constant evolution which will continue to need to take place. As an ecosystem, I think we're all learning, getting better, and learning from what's mistakes that have happened, or challenges that have taken place. And I think that's where every year is hopefully better than the next. So there's probably a little bit more that's required in the system. But I think it's a lot of the positive elements coming out of Mama or other such things. Look, Zepto is a great example of a company which was really written off in the minds of people, not literally, a year or so back, and they came back with full gusto. We've had, I think, the largest funding round from what I remember, or one of the largest funding. And that, I mean, that just shows the resilience and the persistence of founders. And I think that's the part that's in abundance, which is what all of us are very, very keen to double down on. And I think the opportunity in India, whether it's for India or outside of India, remains immense.
Kanwal, I just want to pick up on what we heard there from Karan, and the hope is that we will be able to script a turnaround story like Karan spoke of Zepto for some of these other companies that find themselves in trouble at this point in time. But as we go through this process of cleanup, what do you believe the consequences are likely to be in case some of the larger ones are not able to, save themselves out of trouble?
I think I would agree with Karan. I think one has to be very pragmatic and very realistic about how you address this situation. And obviously, there has been a lot of euphoria, and the way some of these business models got built out were extremely aggressive. Grow at any cost, no concern on cash burn. But what at least I have seen, and if I may, a little bit on the fence, because we don't invest in specifically these the spaces, is that the consciousness of both investors and the companies has been extremely focused on getting the business model right, the basic shape of business right. And I think that is a great first step, because once the ecosystem starts focusing on the fundamentals of the business and what is it that is driving growth, and being conscious of the unit economics, conscious of profitability, I think that's a great first step. And a lot of companies are starting to see, we have seen some early shoots, Zomato, Nykaa, even some of the larger players, where they started now talking about bring profitable results. So I am actually quite optimistic that this is a great, almost silver lining out of a crisis that has happened over the last several months, which will actually augur well overall for our industry.
Yes, that is the silver lining of this pain and the cleanup that we're in the midst of, that there has been a renewed focus on profitability, on sustainable business models, and we're starting to see that in the results of listed entities like Zomato, Nykaa. And as the founder of ID Foods told me just last week here on Young Turks, growth at any cost is the philosophy of cancer cells, and that should certainly not be the model as far as Indian startup founders are concerned. We are going to take a break here, Madhu, Karan and Kanwal on Young Turks, but don't go anywhere. We're back in a minute with a lot more. Stay tuned. Welcome back. You're watching Young Turks, and we're talking with Kanwal Singh, Managing Partner and Co-founder at Fireside Ventures, Madhu Shalini, Managing Partner at Rocketship VC, and Karan, General Partner at B Capital. Madhu, let me come to you now and just address the global challenges that we are seeing. We've got SoftBank Group reporting losses once again, $5.22 billion, the fourth straight quarter of losses. We've got WeWork that has declared bankruptcy. Of course, WeWork India saying that they're not impacted by that. But the global macros as well as the global challenges, the likely impact of that on sentiment as well as funding here in India.
Absolutely. And I think before I get into that, I will say to the last question, Shereen, I have thoughts. There is, we have to sort of keep to the reality of the failure rates of startups. It's huge. It's over 90%, beyond 10 years. I think it was really important for India and as a global ecosystem for startups to keep trying and continuously sort of tweaking their models. Obviously, sustainability, profitability, unit economics, all of those things are really important. But we've always, told our startup founders to not become too scared during difficult times and sort of choke on the growth and choke on what needs to be sort of pumped in. If you are limping and you come out to the other side, you might as well have failed early. You have to continue to be very bold and brave. And one of the examples is that every decade there's new kinds of businesses that come up. It took a long time for Facebook to really sort of figure out what they were going to be doing in terms of monetization. For Twitter, for LinkedIn, there's just a lot of stories. And so you have an incredible amount of growth and you become big, and you're constantly tweaking to figure out sort of, where you land. But the one thing that is really, really important is to be brave and bold and take bets and just don't limp to the other side in a weak way. Of course, you have to be also careful about, other sort of practicalities as you do that. Balance is the key here. Having said that, there are stories like WeWork, which sort of go bust. It's part of the game. It really is. And, it's, but what shouldn't change is the way that investors look at, innovative startups, innovative founders, and you got to continue to take these risks and take them boldly. I don't think that India has been a really huge outlier even in the last 2 years. Things have been difficult outside, and we thought that the US, not doing well is going to affect India hugely, about 18 months back. didn't happen really. It was a little bit slower to catch up. I think that India has got a very robust ecosystem that's largely sort of couched by what's going on outside. Having said that, it's not going to be, it's not going to be completely unaffected by what's going on. But I do think that India's ecosystem is quite robust right now.
Yeah, the relative resilience has played out in favor of India. But Kanwal, we're talking about dry powder that investors are sitting on at this point in time. So given the bets that you've already made, but more importantly, the headroom for growth and the future opportunities that you see, where are you going to put your money on? The top three themes, the top three, bets that you're likely to make in 2024?
I think the perennial favorite for us is always going to be FMCG. So, food and beverages and personal care, if you take any statistics, the penetration levels, even today, especially for products which are offering you better for you, good for you kind of products, we believe that will continue to be one of the big areas of focus. What we have done is we have started investing now also in the consumer health and consumer healthcare space. And we are finding that as a great extension of our overall thesis of looking at consumer brands. And we certainly see ourselves doubling down on that. We have already done several investments in the areas like probiotics, diabetes, fertility, and so on and so forth. And besides that, we are also seeing a lot of disruption happening in the home space. And we believe that, that's another, trend for the new millennial and the emerging Gen Zs, where they are very home proud and they are looking for almost disrupting everything that is done in the house. So these are three, I would say, headline areas that we are looking at. If I may add a slightly different twist to the answer, we also believe that the growth of the next decade will also be driven largely by what we are calling India 2. And that is, again, an emerging class of consumers who are very savvy, very connected, but not yet transacting so much online and still, trying to figure out their own, rhythm of purchases. And that's a market which we believe can really become a very large opportunity. So those are, I would say, the headline trends. I agree with Karan, but from a different twist. I think brands from India going global is the next big hope. And personally, I'm extremely excited about, at least in my lifetime, seeing some mega brands which were made in India, but for the world. And we are very excited that that could happen in the next decade, for sure, certainly for sure.
Yes, that is the big hope, made in India for the world. Karan, let's talk about the top bets that you're going to be making, given the opportunities that you see. And I also want to pick up on what we have seen in the D2C space, because we started by talking about Mamaearth, but what we didn't talk about was what happened with Carrot Lane and that big exit for the founders in favor of Tanishq. And, to Kanwal's point, we've seen a lot of FMCG companies picking up D2C players, etc. Do you see a lot of those kinds of strategic deals go through in 2024 as well?
Sure. So let me take the first part of the question. I think for us, we look at a lot of the cross-border SaaS and B2B opportunities from India for two reasons. I think one, just on SaaS, the whole ecosystem and the playbook to build out of India for the world, largely centered around the US. Has been proven. There are tens of companies that are at significant amount of scale. I think Freshworks going public and a few others that are likely to go public are great examples and milestones that we all can look forward to. And there is a huge and a very growing ecosystem of founders and executives that are in that ecosystem that are continuously building on that. So that's a fast growing area which we think will continue to only grow exponentially. Besides that, I agree with Kanwal on healthcare. I think that's an area that we are spending a ton of time. We just recently released a report with BCG on the digital healthcare opportunity in India. We think that's going to be massive. I think the thing with healthcare to just keep in mind is, it has its own pace of growth. So you cannot look at it as a tech company or as a consumer company, it's a healthcare company. But if you just look at the profit pools, if you look at the demands that's there and where technology can play a role, it is massive, whether it's top down or just bottom up. So health is one. And then, areas like climate and sustainability, again, both for India, because the needs and requirements of India are so unique, different than the rest of the world. But there are also companies that are starting to build out from India for the rest of the world, largely around software and digital platforms.
Yeah.
But again, they're following the same playbook as what the SaaS and B2B platforms have done. And look, that's an area that requires not billions, but trillions of dollars of capital over the next 20, 30 years. To the second part around look, the Carrot Lane acquisition was a process that took some time to happen, and I think Mithun and team have done a phenomenal job. I've been fortunate to know him for a few years, and they did a great job just building the asset the right way. They found a strategic partner, and I think that's very symptomatic of the kind of behavior that we're seeing from large Indian corporates. I think consumer and FMCG are probably the first, but if you look at other areas, there we do think Indian corporates will be a large pool of strategic acquirers for startups for years to come. It's not actually, unlike the US, we always thought it would be large US companies which will be there. And there may be bits and pieces, but the domestic pool of acquirers is a large pool over there. We saw this in a different way in one of my previous companies in First Cry. We acquired the Mahindra business in the baby care, which was a reversal of the trend. Those are the kinds of the meeting of the minds of the traditional world and the startup world, and that 1 + 1 is not 2; it's really 11. And I think that's really the the thought process to build on top of.
Well, yes, and we're likely to see more of these strategic deals go through in the years to come. We're completely out of time. Kanwal, I'll start by asking you very quickly, your own portfolio companies, outside of your portfolio companies, 3 companies that you're most confident or bullish on.
Sure. So let me start with one outside. I really like Atomberg. I think they have done a fantastic job, and I think there is a story to be built. One of my previous investments, and you talked about him, I really like what ID Fresh is trying to build, and PC Mustafa as the CEO and the founder is an inspiration. And within our portfolio right now, we're seeing some very interesting dynamics around the whole sleep space, and sleep companies really tracking well for us. So I would put that as my third choice.
Okay, Atomberg, ID Fresh, and Sleep Company. Madhu, your portfolio, outside of your portfolio, the 3 companies that you're bullish on.
It's very difficult to pick amongst your children, but and portfolio companies are like that. But we are really excited about anything to do with AI. And then just the open AI dev day that happened in the Valley a couple of days ago. It's very difficult to go away from that. Some of the most phenomenal startups coming out, in the Gen AI, in the AI space. We are talking about folks that are going to make a fundamental difference in healthcare and innovation and diseases. So we are I'm personally excited about many of those startups that are going to make a huge difference. We are seeing some phenomenal success coming from startups like Agnikul in our portfolio. That we are really excited to see their launch. Raise just the Dhan app in India. So it's really building for very seasoned investors. And JAR, a couple of our fintech portfolios that we're excited by. And truly, we're just excited by what India's potential is, both in the early stage and then in the later stage as they, as we go here from strength to strength in the coming months.
Karan, completely out of time. I'm going to close with your top 3.
I'll keep it simple. I think space tech in general. I think that's a platform that needs to be encouraged, not one particular company, but that's I think Swiggy, because that is a significant monumental IPO in terms of just size and overall credibility. And then third, Spinny, because I love Neeraj. I've loved everything he's done. Would love to have a chance to work with him in the future, but again, it's fairly large and disaggregated.
Well, Kanwal, Madhu and Karan, many, many thanks for joining us with your take on 2023, but more importantly, with what the future holds for 2024 and for sharing your top picks with us. That's it then on this edition of Young Turks. Here's wishing each one of you a very happy and prosperous Diwali from all of us. We will take a break and return with the news right after this.